Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. We can say goodbye July, and as we are going to talk, was this month a little bit longer than many had hoped it would be? We'll also take a look at what's happening with some weather concerns and, of course, what's going on with Ukraine and the shipment of these barges that are there loaded. Are they going to move, or should buyers be looking somewhere else to do it? Add to it, we'll look at the livestock side too. It was nice to see some friendly numbers wrapping up the week, but cash, can we see a push to some higher numbers as we do run into the month of August? Join us for this and a whole lot more on today's episode.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines, and it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Well, welcome back. As you can see, joining me, Jim McCormick and Brian Splitt. They are both with agmarket.net. And I think, Jim, you put it best when you said this has been a long month when we talked about the month of July.
It has been a very long month, a lot of volatility. You know, the market kind of sold off to begin the month, accelerated in the middle of the month, and here we are the last week of the month. We've gained back almost all the losses in the beans and quite a bit fought off the lows on the corn as well, quite a bit.
How do we move from this? I know that, Brian, it's been a struggle for producers. They've had a lot of outside influences pushing in on these grain markets. Is it just time to kind of, wipe our hands and welcome August?
Well, one of the things that we've been focusing on is using this rally as a second shot. A lot of producers were reluctant to do marketing earlier in the year in that May-June timeframe because it was dry and because we weren't sure what the weather was going to be. And so there are quite a few producers that have seen their crop improve substantially. So for those producers, we're using this as a marketing opportunity. And how you market may depend on your comfort level with your crop. So we still think it's a marketing opportunity for some of those producers that might be concerned about their crop, but maybe marketing in a different fashion, using puts to at least put a 4 under it instead of making hard sales. But the weather has, taken a turn for the worse in the last couple of weeks. The forecast that we're looking at next week was very hot. That's the forecast that took the beans $2 off of last Friday's lows to today's high. It was $2.50 of a trading range just 1 week to the next, and that's pretty incredible.
I was saying, if there's any benefit to the weather being as hot as it's talking about next week, it's not just in a pocket. We're talking a forecast that's going to hit a wide swath of producers across the Midwest.
Well, exactly. I mean, I think that's what's really the concern right now. The beans are moving ever into that critical pod setting phase and all that. And it's not, originally the heat was just in the West. As we've gone through the model runs, it's pushing further and further east. Here in Chicago, they're talking highs in the upper 90s by the middle of the week. And, that's a concern. Now, we did see a little late session or kind of a mid-session sell-off, actually, Susan, today, because the model runs are trying to bring cooler temps and rain in, not next week, but the week after. But a lot of the forecasters are now downplaying that, saying it's too cold of weather. And the fact is we're going to cool down, but we may not get as much rain as what these models suggested, which probably suggests we're going to have a very volatile opening Sunday night, depending on how the models trend coming out of the weekend.
How much weight do you guys put on these weekly crop progress reports with this yo-yo weather we've been having?
Well, it's another one of the variables. When you think back to this previous Monday and the conditions that we got, the conditions dropped more than what the trade was looking for. And then when you compound that with the forecast looking ahead, that got the market very excited. So we would expect a movement in conditions again. But I think the thing that will dominate coming out of the weekend is the forecast of what things look like, not coming out of this weekend, but coming out of the following weekend. And if the models this afternoon are still showing moderate temperatures and some rain in the forecast, I think that will override any additional decrease in conditions next Monday.
This past week, I was with the folks at the U.S. Grains Council's meeting taking place in California, and many producers were talking about the possibility of an early harvest, especially when we look to our neighbors to the south, because of how dry it's been. What are you guys hearing as you talk to customers?
I think we are going to have a shot of an earlier harvest because plain and simple, when we have this extreme heat, it just pushes and pulls that crop along. So the harvest does look like it's going to be early. And I might mention, Susan, for the producers out there, there's a few of them that are still holding on to some old crop grain. I would encourage you to be a little bit more aggressive and get rid of that grain, because we're getting very close where these consumers, the end users, are able to bridge from the old crop to the new crop. So with the earlier harvest coming in, that just shuts that window that much quicker. So like I said, if you got old crop grain, we'd encourage you to go ahead and get it moved.
Do we know what the percentage is at this point? Because it seems like you always have those that hold out until the combines start rolling for the next fall.
I don't know what the percentage is, but one of the things we got to think about going back to the June 30th stocks report was the fact that USDA is reporting more on-farm stocks than a year ago. We've seen the September corn contract versus the December corn contract lose an awful lot of ground since then. We had September corn trading, 15 to 20 cents above December. Now we're almost a nickel carry September to December. I think that's going to be indicative of what to expect on old crop basis as we get towards the end of the marketing year.
All right. It's kind of the elephant in the room that everybody kind of looks at, and this is what's been happening with the war with Ukraine. We kind of heard not a lot in the news, but now it's starting to pick up once again. What concerns do you guys have as this war continues and we've got a lot of ships sitting at port?
Well, I think the real concern right now is, the market broke quite a bit, especially the wheat market, down on the optimism that we're going to start getting some of this grain move, Susan, based on, these export corridors that were signed about a week ago between Russia and the Turkish, as well as the Ukrainians and the Turkish. Now, our viewpoint is, there's 80 boats there that, the owners of those boats, they want to get those ships out of there very, very quick, because they've essentially been locked down for 5 months. The real question we have is, once those ships leave, who's going to be willing to come back into the war zone? Are you going to have crews willing to do it? Are you going to have people willing to insure it? Lloyd's of London are saying they will insure it. But as far as I've heard, there's actually been no quote as to what that insurance cost is going to be. And if it's too high, it may not make it economic feasible for these world importers to buy the Ukrainian grain, which may work to the U.S.'s gain if they have to buy grain. They can't afford the Ukrainian grain because of the premium. Maybe they'll be buying some of the U.S. grain.
Looking at that, though, how much pressure is that going to put? Because we know we've had some growing struggles here as well.
I don't understand your question, Susan. Pressure on what?
He's talking about maybe having these grains be bought from the U.S. Can we meet that world demand knowing that part of the market's missing from Ukraine?
Well, Ukraine, I think the market has adjusted the idea of Ukraine not being able to get a lot of that product out of the country. We've been seeing maybe 2 to 2.5 million tons of product per month. I think what they'd like to do is get that up to about 5 million tons of product coming out of the country per month. I don't think that's feasible. So I do think that over the next couple of weeks here, you're going to see a couple things. Depending on how this really evolves, one of the focus is going to be, are the farmers getting paid by the exporter? Can they get the product to the exporter? And that's going to affect the ability of the Ukrainian producer to get the next crop planted. So they're going to be planting their next wheat crop in August into September. So does that happen? And if we don't see the exports leave the country as being advertised right now, I think something else that's going to do is that's going to bring a premium into the U.S. We're going to see U.S. product demand there is going to be there. And you're going to see, I think in the wheat market, you're going to see some of the values for next year's wheat. So what we'd be planting this fall for our winter wheat will also carry a bit of a premium to ensure that our domestic plantings are there, just to make sure that we have the world availability in lieu of the Ukrainian producer not being able to get the crop planted.
Perfect. Thank you so much for clarifying that. Let's look at the August trade. Anything from a grain perspective that you guys are kind of looking out for as we hit this month come Monday?
Well, every weekend since May has been an event. And I tend to think that this weekend is going to be another event. And so there's two patterns that we've seen. We've seen one pattern, which is sharply higher coming out of the weekend, making a high Sunday night into Monday, which has been a selling opportunity. Or we've seen the pattern where the weather shifts over the weekend, and then we come out of the weekend lower and then continue that selling into the end of the week. So my own personal bias, and maybe Jim can tell us what he thinks, but I think either today was a high and we're going to look back in retrospect and say, geez, I wish we would have sold it Friday. Or if we see a higher opening on Sunday night into Monday, I think that's going to be a selling opportunity in the big picture.
All right, let's look at the livestock side of it. Cash cattle numbers, we're seeing some drop here at the end of the week, but there's still some optimism out there that we could push for some higher numbers. What are your thoughts on the way this market's been trading this last week?
Overall, I think you got to be a little bit optimistic with it. I mean, like I said, the cash cattle dropped a little bit. We are concerned about some liquidation of the herd due to the extreme heat and people liquidating out. But the reality is, if you look what's going on, I think to the consumer as we wrap up the summer, I still think, Susan, there's people out there that want to go out, they want to eat, they want to enjoy these last few weeks before school starts. The price of gasoline has dropped over $1 from the highs, and to put that in kind of economic perspective, that's saving the consumer over $1 billion right now. So with the consumer having a little bit more money in his pocket, hopefully that's a good sign that they're able to come in here and be a little bit more aggressive on buying those steaks as we wrap up the summer's grilling season.
Is there any marketing concerns or marketing thoughts our cattle producers need to be thinking about as they look at the last few months of summer?
Well, I think right now we've seen relatively a very sideways market. You go back 6 months and December live cattle futures are about the same spot they were back then. And I think we have this constant, tug of the fundamentals of the cattle market look good, decreased numbers, but then we're concerned about the economy. And so we also are seeing gas prices kind of come back up off the lows as well. They've dropped quite a bit. We're coming off the lows. And so as we head into fall, that would be my general concern is, do we see the economy stumble? We've seen a lot of liquidation in the grains during the month of July on kind of that perception of recession is here, or recession is coming, and we're debating the definition of recession right now. But I think that would be my biggest concern on the cattle market.
All right, well, thanks to both of you joining us this week. I always want to remind folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that has been the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff.